In this video, guys, you're going to learn the simplest ElliotWave trading strategy. All right, so if you are interested in learning ElliotWave strategy, this video is for you guys. The ElliotWave concept is very simple, but the problem with most traders is that they are trying to overanalyze the market, they're trying to overthink the process. But in this video, we're going to see the simplest form any beginner can look at the market and be able to understand the concept of the theory. All right, so the first thing you need to understand that the theory established for us is that every market starts with an impulse. So markets start to make an impulse, a correction, an impulse, a correction, an impulse. So after backtesting over 70 years of market data, they've discovered that for a market to be trending, at least we expect to see 5 waves. All right, then after which the market will correct itself by giving us 3-wave pullback. All right, so this is just the concept, and that's the totality of that concept you need to learn. Nothing more, nothing less. Now, the first 5 moves of a trend is labeled with from 0, 1, 2, 3, 4, 5, and the counter waves, which is the corrective structure, is labeled A, B, C. So we start from here, we label it A, B, C. All right, so this is the complete structure of a wave. And also from the ElliotWave concept, this is a cycle. Okay, this is a cycle. So the market makes a cycle in a cycle in a cycle. That's what we call the fractional nature of the market. Okay, so the rules from ElliotWave establishes that wave 2, which is this, cannot retrace to the starting points of wave 1. So if you see any market that retraces, to the starting point of that wave, that nullifies the count. So you don't need to check whether the market is trending or not, because wave 2 have actually retraced to the starting points of wave 1. The second rule states that wave 3, which is this, cannot be the shortest wave in the move. So if you compare this wave, this and this cannot be the shortest wave in the move. And the final theory says wave 4, which is this, cannot retrace to the price territory of wave 1. So you cannot retrace to the price territory of wave 1. All right, so this is just the complete rule. So but for you to master this, you need to try as much as possible to see how you can identify it in the market. Remember, our goal here is not to be a professional analyst, but to see how best we can maximize this information to take the trade that would move in our direction so we can make money. So our goal here is to make money. So now, having identified these rules and the structure of the ElliotWave, what do you observe? If there is an impulse move, if you take this wave out, what we're expecting is to see a corrective move before that impulse continue. All right, so if you see something like it, a sharp up, sharp down, that does not equal a complete corrective structure, because from the concept that this is an impulse and this is a correction, so the characteristics of the correction is that the corrective move spends more time, okay, and has more waves. All right, because haven't seen that most times, for every market, we have 80% of the time they are consolidating, and 20% of the time they are moving in impulsive. So the consolidating state is what happens at this point. So that also tells you that the market, it spends more time here than it does here. Okay, so with that in our mind, we can see that what should be expecting from any wave is at least a 3-wave move. 3-way move. As market makes an impulse, it makes another impulse. We have what? 3-way move here and stuff like that. Okay, so these are the corrective structure. And for us to build a strategy around this, there are patterns Elliot have identified. Now, for us to make this video to be concise and straight to the point, because remember, the simplest ElliotWave trading strategy that is profitable, that anybody can learn today. We are just going to pick one pattern, and we're going to show you how you can use this pattern over and over again. You know, remember, you only need one pattern to trade one pattern consistently in all time frame to make good money. And that's what we're going to show you in this video. So, but for emphasis, we have over 13 patterns and we have over 4 flats. Okay, so the flat we are going to take today is what they call the regular flat. So a regular flat is established this way. Once there's an impulse, the market makes a correction, like impulsive form, and retraces up and comes down again, okay, but without breaking this top. So this is a regular flat. Okay, so there are some textbooks that call it a flat, okay, but we call it a regular flat. Then what you will be expecting is that after which the market starts going up. So your job as a trader, before we dive into the real market, is to establish and be able to see the form of a regular flat, okay, because the dimension or the ratios or the stretch of that regular flat differs based on market. But the most important thing is the form. And what is that form? After the market makes an impulse, it corrects himself and retraces again without breaking that first low. So that is a form of a regular flat, and anybody can easily identify this in any market. So your job as a trader is, once this last wave breaks this, after you have seen your first impulse, is to focus your attention at least at this point, to put a buy stop at this point, or in the other case, sell stop, so you'll be able to ride the wave as the market goes. Or if you're the one that identify a candlestick pattern, to see for a candlestick pattern at this point, and should be able to take the wave up. All right, so this is just the simplicity of that concept. So let's dive into the real market as to be able to see how we can identify this concept in a practical, in a live market. All right, so looking at this wave here, we can see clearly a 5-move impulsive structure. All right, so let me draw it so you'll be able to see it clearly. Let me bring out this 5 wave here. We have 1, 2, 3, 4, 5. Okay, this is a clear 5-move impulsive structure. Now, irrespective of the time you're coming, your job as a trader is to identify this move. If you zoom into the market, you can also see a smaller 5 move again. Okay, we can see an impulse, a correction, an impulse, a correction, an impulse. All right, so that is why you need to pay attention to the fractal nature of the market, because there are wave within wave and within wave and within wave in every market. So if you go to 15 minutes time frame, this would have been a perfect setup for you. So how do we identify the regular flats? So having identified this first move, an impulse, a correction, an impulse, a correction, an impulse, even the first impulse. So you start looking for, you know, when the market gives you a counter impulse, a correction, and another impulse that will break the beginning of that one. And where can we see it here? We saw it here, impulse, correction, impulse, but it's too small. Okay, so all we need to do is to draw a trend. For 15 minutes, this will have been a perfect one, but we have here impulse, correction, impulse. So we draw the trend. You know, you are positioning yourself at this point, you are putting your stop loss here, and be able to ride the wave. So let's see, you know, how it would have played out if I should take out my, put it here, at least 2:1. Depend if you are targeting on, if the market is just starting, at least 2:1. But if you're on the last wave, you know, because markets goes to the 5 wave, on the last wave you should be expecting at least 1:1. Okay, so here now we have, you know, the market plays out exactly. Now you can see another one. The market also gives you the same structure here, an impulse, a correction, an impulse. You can put in the buy entry here and put in your stop here, and the market will be able to ride in your direction. So if that's the case, let's see how I can put it here. Okay, you put your stop here and you're expecting the same move to play out. Okay, so as the market is moving, because you already know that this market is already trending. The market has made the first impulse. So anytime you see that structure, a regular flat, and where else can we see it here? We can actually see it at this point, impulse, correction, impulse. So we can put our entry here and put our stops here, and we take the wave. You can see in within this move, you might be in the 3 position running. So as the market gives you more data, you start, scaling in or scaling out. Okay, so you can see a clear structure here. Again, the market gives you an impulse, a correction, an impulse. So at the break of this point, you are putting your stop, your entry, and you're able to ride the move to your direction. So we have it here. Okay, so you are riding the wave. Now, as the market begins to correct himself or begin to lose momentum, by giving you weak candles, so you start being more careful and by taking profits off the table and stuff like that. So I can go on and on to show you a lot of this. Now look at more pattern here. We have an impulse here. We have a correction here. We have an impulse. You just put in your buy stop here. The beauty part of this that most times, if the market won't go in your direction, you won't be triggered. Okay, your position will not be triggered. Okay, so like look at what happened here. We have an impulse, we have a correction, we have an impulse, and you can see this one is stretched. So when you see this kind of stuff, you can just cancel this trade and wait for the nice setup. You can see, and that was what happened here. The market actually gave us the nice setup. Believe you me, this strategy is awesome. Okay, I've done a back testing of this personally on regular flats, and man, the result is mind-blowing. The result is mind-blowing. You'll be more right than wrong on this, and you have confidence. You'll not be reacting in the market. All right, so here we have it again. Here we can see the market has given us an impulse. We have impulse, correction, impulse, corrective structure. You are putting your entry, your sell stop at this point. Okay, even if the market goes to the moon, you are not affected, but now it triggers, you put in your stop loss, and then you are in the move. Okay, you can see, so you can do a back test for yourself. And also, let's see, here we also have the same setup, and impulse is coming down, and we have a counter kind of trend, and you put in your entry here, your stop here, and that's where you go. Okay, so if I should keep going down or up, now the beauty part is that you don't need to stretch yourself before you see this setup. It's everywhere in the market. Okay, it's everywhere. You follow the market as it develops, it gives you the data, and you'll be amazed on how profitable it will be. Now you can see there are other patterns that have been identified by Elliott that we've not covered. We're only covering the regular flats, and you can see how only regular flats has made us profitable. Now imagine when you learn all these flats, imagine when you have them in your fingertips, then now you'll be able to position yourself to be a market maker. So you stop reacting to the market, you'll be able to take decision based on the data the market has provided, and most times you'll be more right than wrong. And even if when the time the market will go against you, it will just be a small loss. And remember, this is a game of probability. Nobody is right 100%, but we win more than we lose, and that's why we are profitable. If you want to learn this kind of concept, if you want to develop your trading career to be a master of the market, you kindly contact me by using the details below this video, okay? And I'll be glad to help you, to take you by my hands and show you exactly what you need to do and how to develop this, how to fine-tune this strategy to suit your personality. Because that's the beauty part of it. How to fine-tune this strategy to suit your personality so you'll be able to trade consistently over time. Don't forget to subscribe to this channel. Don't forget to like this video, and don't forget to share with your friend. And thank you for watching. See you in the next video.